What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. We're going to talk about what happened last week, and we're also going to talk about what we can look for potentially next week. With that being said, I want to say this right off the bat. There are a lot of bullish factors out there. First and foremost being price. We're going to discuss all of this stuff in today's video, but I just want to get these two things out there. There is also a lot of bearish stuff out there that could potentially see prices go much lower. We're going to discuss both cases, the bullish and the bearish. All right. Now, let's start with the weekly time frame. As you see here on the weekly time frame, I have my 21 exponential moving average. Last week, not this week. This week's going to close tomorrow, and you can see that it's a very small range candle in comparison to last week, which is, good. You get a big, nice bullish expansion. You break out above multiple resistance zones, and you close with the 21 exponential moving average being pretty much in the middle of that. Then this following week, we have a small pullback. It is a small pullback down to the midpoint of last week's range, and you are seeing a little bullish pop from that region. Now, in my opinion, as long as you're trading above this, you can look for higher prices, right? Next area of resistance is going to be right there, $50,801. That will be your next area of potential resistance for your bullish moves. So let's go over here and also look at the 2-week time frame, as it pretty much did the same thing, traded right up into the old 2-week support zone right there, closed above it ever so gently. Just barely closed above it. Then the first week of this 2-week candle, there's still 8 days left on the close, so this will not be resolved tomorrow. It will be next Sunday when this candle is resolved. Did the same thing, broke down, tested a 21 exponential moving average. You are seeing a little bit of a bounce. Back over here to the weekly time frame, another thing of note. Remember, once you get above your 21 exponential moving average, in most cases, that means you will have been broken out back above the 50 on the RSI. And anybody that follows this channel knows that I do like to put a lot of weight on that, especially on your higher time frames, daily, weekly. Right now, the weekly chart is suggesting that we could potentially see more upside. All right, so there you have it. If you are a bull and you like to jump on my case because I like to talk about the bearish scenario, you have your win. Yes, price action as of right now with this week, however it closes, won't really matter. Next week will be the important. Next week, you could potentially see a range expansion back to the upside, and we will have a target of $50,000 if that occurs. And along with that, I can go over here to a lot of these Glassnode charts for you and show you right here the trend score. This is one of the newer metrics that Glassnode has put together. When you on the dark mode, this actually reverses from light to dark mode, but on the dark mode, anything closer to the white colors means you're accumulating. Anything closer to the brown colors means you are not. As we discussed in the last several weeks, we've been doing these videos watching this metric. We stated that this thing is firing up, and we are seeing more accumulation. And we can also see that in the futures open interest. If we look here at this metric, since price has been rallying, remember, we were long, we were targeting the yearly open, we were looking for that liquidation to occur. That happened, we took profits. Now we're kind of neutral, watching how the price is going to play out in the next few days, because I think we could have potential to see a massive move in one direction or the other. With this being said, look at this open interest and where we were up here. Look at that number, $17 billion in open interest we hit at the end of the month. March 29th, we hit $17 billion in open interest. That puts those levels at open interest up around like your, major highs back in April. Like a lot of your big turning points, your open interest was up at these levels. So that means you have a whole lot of people that are setting in leveraged longs right now. So a deeper correction could spell disaster for the bullish side of things. So basically what that means is a lot of people was getting long last week while this thing was moving higher and the week before. Remember, this is where we were looking for bullish entries. That happened, and now here we are, okay? So let's go ahead and talk about this. Let's go over here. Let's for now kill the moving averages, but they will be back up as I do have more to discuss on that. So coming over here to the year-to-date chart. All right, so here is going to be, I got to pull this down just a little bit. Let's get rid of that old resistance level up there. Let's put on the 2022 high. That is your 2022 high. There is your open of the yearly range. You have been sideways. So if you're looking as far as trends are concerned in 2022, you have been doing nothing but moving sideways. When we took this long position, we were looking for price to trade up here and liquidate all these higher buyers, and that occurred. When that occurred, that brought in more demand, and that propelled price up even higher and liquidated the yearly high. Now, why does this matter? Why is this relevant? Because bigger participants in this marketplace love to sell their positions to higher buyers, and those are the people that can potentially move the market. So now that we have liquidated a ton of demand that was already sitting in the market, we know that more demand is coming into the market simply because price is moving higher. Price as an advertisement mechanism, that's what it does, right? It puts big green candles, gets people to buy, and big red candles gets people to sell. That's not how it's supposed to be, but that's how it is. That's how people do it, right? So as price is trading up into our targets, we are taking profits up in here while new people are getting long. April 29th, this day here, that's the day where you had $17 billion worth of open interest, and right now we're currently trading under that. So moving on, what am I looking for? Since we made a new high on the year, that is a fresh yearly high. Since we have that, we know that the near-term trend last 2 weeks have been extremely bullish. All right. With that being said, we can watch support. Now that you have a support zone here on the daily, you can watch that level. Let's go ahead and forget about the yearly opening range for now. We know that it's in this region. And what we want to see, if we want to be bullish, is we want to see Bitcoin make a new high. You got to get above this. You got to close above that. That would indicate continuation. And that in itself would say, yep, you're probably going higher. Let's cancel looking for any short positions for right now, simply because the momentum is bullish. On the weekly time frame, 2 weekly time frame, all bullish. You broke above the 2 week or the 1 week 50 on the RSI. So you have to look at that as something. So red line, 200, simple moving average. Gray line, 377, simple moving average. Now over here on this, we're going to look at this real quick. I only brought out the 200 the 200 simple real quick just to show you that, yeah, it is currently above price, and you are currently, here, let's do this. You are currently trading under it. So the 200 is acting as resistance. You also have daily resistance right there. Notice you did not get a close above it. So as of right now, the 200 and the daily resistance is holding price down. We got this pullback down here into a level where there really wasn't no reason for price to bounce here other than the midpoint of last week's range, of the big bullish weekly range. So with that being said, this could potentially be a target if indeed resistance continues to hold. Like I said earlier, for bullish continuation, we need a daily closure above this resistance level and preferably above that 200 simple moving average. Then you could probably see a nice squeeze up to that next weekly resistance level. So, but right now we're talking about the bearish case. For this, we're going to go to the BLX index, and this is going to be brief. All right, so this is the daily on the 377. We're going to come over here. There's a couple things that I want you to see. Last year, or last time we had a bull market rally, 2017, and then the 2018 bear market phase, you can see that when you traded down to this region, that's where you got a bounce. And then you got under it here, you traded back up to it. Yes, for almost a week, you traded above this 377 moving average, but then once you broke back down below it, you basically traded sideways, went nowhere till you broke down below 6K floor. And it's done it again, or it's done that before as well. Another thing to notice here is the slope change on this indicator. So this is going to be your 2013 bullish market rally. This is your blow off top. You know, you get dead cat bounces in this stuff. Then you come down, ping, you hit your 377 simple moving average. Then you get that dead cat bounce. The slope is what I want you to focus on, this moving average. Now, this is not the end all be all, guys. Moving averages, technical indicators, any of those things, none of them are going to be the end all be all of what could potentially happen on price. But what we do is we get a bias, right? We use technical indicators, technical levels to basically get a bias. What's going on? What happened last week or the last 3 days for my case, because I'm more of a day trader, more of a scalper. But for your longer scenarios, a lot of technical indicators saying that Bitcoin's going to go higher. Lot of them. Few technical indicators saying that Bitcoin's going to go lower. Your slope has changed. This moving average is a very slow moving average. So it's a 377 period. That means it's looking back 377 days. Our slope is changing. You got above it for a little bit. Now you're back below it, and it's currently holding as resistance. So what you can watch moving on, if you are an uber bear, is you can watch to see if that supply zone right there at $47,000 holds. Let's go back over here to the Bitcoin chart. So we can get rid of this, close down the moving averages as they've done their job. We know that the 377 is sloping. So now what we know here is we got a lot of open interest in the market to the bullish side. We have an obvious daily supply zone right there, and then your daily resistance level is here, and then your fresh new all-time, or not all-time, but your fresh 2022 yearly high all right here. In summary, for your bullish continuation, you need to see a daily closure, in my opinion, above $48,000, as that will take out that resistance level over here that's currently holding price. So a daily closure up above that would probably say that we can look for continuation to the upside. If you fail to get that daily closure and you trade underneath this level here for any amount of time, like the next 2 days, 3 days, or whatever, then we will be looking for short entries, and we will be targeting this wick low. All right. If you look over here, there is, I guess, these daily levels. They're not exactly perfect, but I guess one could say, you know, that's why you got that bounce, old resistance. Obviously, there's the break, traded back down into it. So I take that back as far as here, but I typically like to look for fresh, unused levels. This is an old level because we broke out above it. So coming in for a retest on that first retest is good. You are getting a bounce. So to get that continuation, you got to get up there. You got to maintain control over the 2022 yearly open, because if you don't, all of that open interest that's still setting out there for bullish leveraged positions, the fact that we have triggered the yearly opening demand as well as the yearly high demand, and you are seeing a slight bit of a pullback, that doesn't necessarily mean that, you know, bigger market participants are selling into that demand. But at this point in time, you know, it could take a little while for that demand to be sussed out. New demand comes in, then you could outweigh supply, and you could absolutely see a bullish rip to the upside. But since you took out that yearly high and you have corrected, it's only a correction at this point, and it is a very small move. This move is nothing in the grand scheme of things, but it does say that once you got that yearly that yearly high test, that you did reject and you did pull in. So what we're going to do is we're going to watch this. If this continues to hold as resistance, we will be looking for near-term shorts. We do have a lot of stuff. If you get down below this low down in here, say you get back down into the $42,000, $41,000 regions, that open interest is going to be fuel for the fire to push this thing down, breaking down out of this bigger, longer term bear channel, or whatever you want to call it, bear flag or whatnot. Also, you didn't break out above that yet either. So if you were to get down here and break down, remember, a few weeks ago, I did a measured move on this. If this were to break back down, you could potentially see prices get as low as 23K. That gap fill would be 23K. The upper edge of that gap is 26K. Let's go look at that gap real quick, and then we will wrap this video up. Down here, there's your big fat gap, all right? So this big, massive, fat gap is setting right underneath all of these swing lows. Would be perfect area to look to become a new buyer on Bitcoin if that occurs. So longer term bear thesis with all the open interest in the market, we could see price get propelled lower, obviously. Also, the macro backdrop doesn't really support a bull market as far as, month over month climbing inflation. You got a war going on over in Europe. I mean, a lot of other things. With that inflation is going to come interest rate hikes, a lot of factors out there that could suggest that you're going to see lower prices, yield curve inversion, yada, 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 right? And then on as far as accumulation factors on the Glassnode charts, yeah, it does look like you could potentially see higher prices. And with technical analysis making a new yearly high, and with the weekly looking the way it does, you have to give credence to the bullish side of things. So I let you choose. You guys be the decision makers. Let me know down in the comments section below what you're going to do. Are you a bull? Are you a bear? Are you neither? Are you like me? Are you just going to trade price, whatever price does, and make money? Let me know down in the comment section. If you have any questions at all that I did not answer here, drop them down in the comment section as well. If you learned anything or if you liked the video, please show me that by smashing that like button. If you have not already, make sure you subscribe. Thank you guys so much for your time. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.